This is Anthony Galliano with an accounting and auditing update. On May 25, 2026, the Royal Government of Cambodia issued Sub-Decree No. 102 on fines for offenses against the law on accounting and auditing that sets out specific fines and enforcement procedures for violations of the law on accounting and auditing. The sub-decree determines the offenses and fines for non-compliance of the law on accounting and auditing and determines the competent authority measures and mechanisms for imposing fines and managing fines in order to ensure effective implementation of the law of accounting and auditing. Royal Government of Cambodia's Sub-Decree No. 79 on transitional penalties for the violation of the law on accounting and auditing issued on June 1, 2020, provided a transparent system of financial penalties to enforce strict compliance regarding bookkeeping, independent auditing mandates, and financial reporting across commercial enterprises and nonprofit organizations. Sub-Decree No. 102 institutes broader and more substantial transitional fines for offenses against accounting and auditing laws. The sub-decree gives practical enforcement power to the accounting and auditing regulator as follows: how much each fine is, who can impose the fine, how inspections are carried out, what happens if the fine is not paid, and how an offender can object or appeal. The sub-decree applies mainly to enterprises registered with the Ministry of Commerce and/or the General Department of Taxation, especially medium and large taxpayers that are non-audited enterprises and audited enterprises, nonprofit entities including audited and non-audited NGOs, associations, and also for professional accountants and auditors, including both individual license holders and accounting firms and auditing firms. The sub-decree details fines for compliance failures, which include not submitting annual financial statements to ACCAR, not having financial statements independently audited when required, not keeping accounting records, improper bookkeeping, preparing financial statements that do not comply with accounting standards, not using financial statements for tax obligations, not retaining accounting documents for the legally required period, intentionally incorrect financial reporting, obstructing ACCAR inspections, not using Khmer language or Khmer real in financial statements submitted to ACCAR, using a different accounting period without ACCAR approval. The sub-decree lists 85 categories of fines, and B2B Asia News will release a more comprehensive video detailing each of these fines. The fines in this sub-decree are much more substantial than sub-decree No. 79. Briefly, for an audited enterprise, the largest fine is for failing to lodge annual financial statements with ACCAR, which is now 60 million real or $15,000. Failing to have financial statements audited when required is now 20 million real or $5,000. Other major fines such as failure to keep accounting records, incorrect reporting, obstruction or failure to retain accounting documents are generally about 10 million real or $2,500. For non-audited enterprises, failure to lodge annual financial statements with ACCAR is now 50 million real or $12,500. Failure to keep accounting records is now 10 million real or $2,500, while improper bookkeeping is 5 million real or $1,250. For nonprofit entities, the fines are generally lower, but still significant. For an audited nonprofit entity that fails to lodge annual financial statements with ACCAR, they may face a fine of 36 million real or $9,000, while a non-audited nonprofit entity may face a fine of 27 million real or $6,750. The sub-decree also imposes fines on accountants and auditors who are members of the Kampuchea Institute of Certified Public Accountants and Auditors and who hold a professional accounting or auditing license from the Accounting and Auditing regulator. Penalties include late payment of professional license fees, late renewal of accounting or audit licenses, audit reports that do not comply with Cambodian auditing standards, failure to retain audit evidence for at least 10 years, audit firms failing to rotate individual auditors as required, providing audit services without valid professional insurance, and failure to report suspicious transactions related to money laundering, terrorism financing, or proliferation financing. The subdecree also uses a staged penalty approach with a warning initially given and percentages of the penalty applied with different stages of noncompliance upon further inspection. For the implementation of accounting and auditing obligations, ACAR now has the authority to conduct on-site inspections at the premises of enterprises and nonprofit entities if such enterprises or nonprofit entities are considered to pose a risk, such as failure to lodge annual financial statements with ACAR, and an enterprise or nonprofit entity that has received an independent auditor's opinion of adverse opinion or disclaimer of opinion can be inspected. The subdecree was signed on 25th of May 2026. However, most fines will begin to apply 6 months after, meaning around the 25th of November 2026. Some obligations related to bookkeeping, financial statements, and document retention begin after 1 year, or meaning around 25th of May 2027. For Cambodian companies, especially medium and large taxpayers, this subdecree means accounting compliance is becoming much more stricter. Companies should make sure they submit annual financial statements to ACAR, know whether they are required to have an independent audit, keep proper accounting records and supporting documents, prepare financial statements according to the applicable standards, use Khmer Real and Khmer language where required, retain accounting records for the required legal period, and respond to ACAR inspections or notices promptly. This is a pretty serious and substantial subdecree, which the fines have really increased significantly. For those enterprises that are not keeping accounting records, especially medium and large taxpayers, this is really the red line. The companies need to keep accounting records with proper accounting systems. It's essential. The fines, comparatively to countries like Singapore, where if you're late 3 months, the fine would be about 300 Singapore dollars. If it's greater than 3 months, the fines would be about 600 Singapore dollars. Vietnam poses fines for 3 months late between $200 and $400, and it raises up maybe to $2,000 after that. We're at levels of $12,500 and $15,000. So this is really a substantial penalty and fine for noncompliance. So make sure you have good accountants and make sure you comply with the law. This is Anthony Galliano for B2B Asia News.